We're really honoured to have you here tonight as we delve into the exciting world of technology, innovation, and entrepreneurship. Shortly, I will be introducing Scalare's new CEO, Carolyn Breeze. She's going to be sharing some valuable insights in navigating the ever-evolving technology landscapes, shedding light on the challenges and the opportunities that we see lie ahead. After this, we're going to hear from some exciting startups. It's new investee companies that Scalare have recently invested in. It's Sondi, Jeddle, Roy AI. You're also going to hear from a few familiar faces from the Scalare portfolio on some of their latest developments. Then you're going to hear from Team Scalare. We're going to tell you a bit about our new initiatives and our growth plans.
We have these amazing events, and I've worked with some people in the room here before. You're going to meet Asim later. We started together at eBay way too long ago to show both of our ages, and then at PayPal, and then stepped into the world of startups. And in all of those roles, but particularly those in startups, in a commercial lead role. So my job was to build out the go-to-market, basically the return on investment. I gained a lot of scars, and along the road I've always loved mentoring and investing in startups and tech, particularly tech outside of the vertical I was known to work in, which was fintech. And I feel like when I met the Scalare team and the partners spoke to me over the Christmas break about joining, that someone had merged my two worlds together. I get to help businesses scale, help them grow, share my scars, try and protect them from getting the same scars, but also help grow Scalare as a business itself. And so I feel like someone's given me an amazing, amazing gift. And so I hope that tonight you feel that in the room. So I just wanted to give you an update of what we've been seeing in the market. For those of you that weren't here in November, that was much more of a doom and gloom kind of presentation that I gave around what was happening, particularly in the macro market and how it was affecting the room. And I'm conscious that we always have founders in the room, both ones within the portfolio and ones that are looking for funding. And so I feel like it's my role to give you all an update with my investor hat on, the types of things we're seeing in the market and the reasons why we do or we don't invest in tech, and then hopefully to open up discussion when we all get together later for a drink. But basically what we've seen since Christmas is that valuations are still stabilising, and I know that many of you in the room are feeling that firsthand. The markets have reassessed what they're willing to pay for companies with the possibility of outsized profits versus smaller but more sustainable short-term returns. And unfortunately, a big fallout of this shift is that you, the founders, are dealing with that. If you think about Series A and Series B, typical type funding models, and big fan of these organisations, but just to give us some context, so I'm talking about the Airtrees and the Blackbirds and the Square Pegs of the world, and particularly those in the US more so. They have big valuations of companies they invested in 2020 and 2021. Some of them are 30x revenue in private markets, 5 to 10. And so the downside of that is that money is still there in those organisations for the ones that are surviving, but it means for the investments that are being made today by those organisations, they're going to be more stringent on you, the founders of today, for your valuations. It's almost like you're paying the price for that. And so what I'm hoping to do is give you some comfort in what we're seeing in the market and how it's kind of coming out the other side. Life's never been easy for founders, particularly, however, in the last 10 years, it's felt easy because capital's been cheap. Founders went from, 8-9 years ago, if you were a founder, you didn't have a job. Now, if you're a founder, you're an innovator, you're solving the world's problems. And that's been a change. Capital's been cheap in the last 10 years, but now the tide has turned, and it's really important for us as investors and as founders to focus on what really matters. And the only true measure of startup success is building a business that can grow quickly and eventually grow sustainably. So most VC-backed businesses, as we all know, are intentionally loss-leading in the initial stages. They're growing that market share and building out their go-to-market and business model. But now more than ever, investors are looking for markets and companies they're looking at the capital efficiency of the growth. And so some of the metrics have changed. I was at a pitch fest in Melbourne yesterday for the CommBank Business Awards, and I took my hat off to the 8 companies that came up and pitched, because when questioned, they knew their burn rate, they knew their rolling revenue, and they knew what they were going to do and where the growth was going to come from. Now, if that pitch fest had have happened 2 years ago, I guarantee you those companies would not have known their burn rate. And so people are becoming well more conscious of this net burn rate. The only true measure of success is building these businesses that can grow quickly. And across all the fundraisers that happened this year, and we'll go through some of them in a little bit of time, the single metric that correlates mostly with the valuation is your net burn ratio. And we're looking at how you plan to spend and what your case scenarios are. What's the best case? What's the mid case? What's the worst? The dire case, which is what we've seen. The second most highly correlated is your customer acquisition and your cost payback. How efficient is your sales cycle? What's your ROI looking like on your investment when it comes to go to market? And a distant third, which I would argue was number one, overall growth. We've come a long way, but the Australian ecosystem is still very vulnerable. It's still in its early stages, but we're in a much better place than we ever were. Businesses are more sustainable. Opportunity to ride some of the biggest market waves in the history of the Australian market. We've got open data regime, blockchain's becoming a thing. The government is putting out way more incentives. Startups have learnt to do more with less and are partnering more for growth, and the world has definitely flattened. We're seeing amazing early stage startups come through Scalare, and as you all know, I only joined at the start of the year, and so for me it feels hectic but normal, but hectic, but you know, apparently we're seeing a lot more than we did before, and they're all amazing. There are some fantastic ideas out there in the market and some amazing founders looking for money with brilliant ideas and a really solid understanding of their financial situation. This is a fantastic time in our ecosystem. The market is listening. So in the last few weeks alone, we've seen some pretty significant raises. I know it's hard to look past the layoffs and the doom and gloom, but I'm going to give you some. iTelligence raised 18 million. This is just in the last 3-4 weeks. They do retinal images for early disease discovery. Flint Pro raised 13.5 million. So they simplify capital reporting for carbon and greenhouse gas emissions for corporates and venture funds. Kismet, 4 million, an end-to-end healthcare system with a plan to help people manage their fund management and also have a wallet. So that, you know, when they go and get the groceries from Nana, she's not taking $50 out from under the mattress. She's putting it in her Kismet wallet and it's all tracked. It's pretty cool stuff that you're like, why didn't I think of that? That should have been solved 10 years ago. Well, Canaponic, 5 million medicinal cannabis company. I was kind of surprised by that one. I kind of thought it had its wind. Thought we were a little bit behind. Appears we're not. Finspo, 2.55 million, an online mortgage broker. Fintech's very close to my heart. Mortgages still take 40 days. People still don't know who I am. It's really frustrating. I'm really proud of them. VC fund Giant Leap raised 45 million to launch a second impact fund, which is triple its original raise of 2 years ago for 15 million. There is money in the market for the right startups solving the world's problems with their head on their shoulders when it comes to finances. The next year is going to be difficult, but we have to think and plan for 3 to 5 years and sometimes a decade. Over the long term, I'm still excited about Australian tech. In good markets or bad, we're going to find some incredible founders and startups. I shared this stat in November, so apologies if you've heard it before, but it's definitely worth sharing again. Australia is the most capital efficient producer of unicorns in the world. 2.1 unicorns per $1 billion of VC invested. We are 50% higher than the nearest, which is Israel. That's incredible. For the founders in the room, Aussies know how to do more with less, and they partner better than any market I've ever seen. Never lose sight of what you're building towards, a sustainable, fast-growing business. If enough of you do that, we don't have to worry about the news and jobs and layoffs and funding. It'll all happen. It'll all be organic. For the investors in the room, now is a better time than ever to invest in early-stage tech companies in Australia. It's survival of the fittest, and we're seeing some of the best tech to date come through our doors and within our portfolio. As the market returns to normal and growth again accelerates, and we're seeing that already, the decision to invest in the right tech companies at the right time will be key. I hope you all enjoy tonight. You're going to hear from some of these investments we've made in the last 6 months, and I'm sure you'll find them as amazing as we do. And I'm going to start with a video from one of our most recent investments, Danielle from Zondi.
Hi, I'm Danielle Morton, CEO and founder of Zondi, and we're passionate about giving farmers the tools, the data and the science to unlock the true value of food and fibre. We do this through our patented multispectral technology in either a smartphone or a handheld option. As you can see on the screen, we are able to scan the food, unseen colour wavelengths are detected, AI interprets the data, and then we're able to give the results back to the user. In the case of one of our MVPs, you can scan an apple and tell if it's organic or not. Our first commercial application is actually in fibre, wool. With over 67.1 million sheep shorn in Australia, it is incredible that the on-farm wool classing technology has advanced little since the year 2000. Why is this important? Because once a year, this is the farmer's chance to actually make a profit from the wool that they've grown all year round. Our solution looks to save farmers time by reducing their mustering, enable them to get higher prices at auction, and save them money as they will have access to data to make better breeding decisions year round and improve the genetics of their flock. Our unique value proposition is the ability to shrink the old, inaccessible on-farm wool classing technology and provide farmers with a handheld gadget so that they can test the wool real time, and it will be accessible to all 26,000 farms if they want it. The market size in Australia, in the world, is 232 million sheep. In Australia, 67.1, and we're targeting to start with New South Wales and Victoria due to the low micron profile of those sheep. With 2,300 early adopter farms, that's 11.5 million sheep. And with our business model of $2 per scan, our target revenue is $23 million for these farms. Our go-to-market strategy is greatly assisted by our partnership with Australian Wool Innovation, and we have also partnered with Australian Wool Network, AWN, who manage the broker network. They are introducing us to the National Broker Network, who's responsible for all brokers in Australia, and they're looking to become our distribution partner for the hardware, as they already have on-farm relationships and would be able to take our technology out on-farm to sell. The McKinnon project in Melbourne University confirms that if you are able to test every fleece and separate the wool into fibre diameter lines, you can increase the profit. Our technology is applicable in both food and fibre. As I've said before, we have done an organic apple study. We're working with Cobram Estate on olive oil. We've done steak, testing Angus versus Wagyu steak, and we're working on a ginger disease detection project at the moment. We have an incredible global team, which is what makes this all possible. So we have people in Germany, Udo Seifert, Andrea Matros, Dr. Andreas Backhaus, and Khaled is our CTO, who also has a team in Pakistan. Emily is in Asia, and we have a team from Melbourne and Port Macquarie as well. So we're quite global. Our customers speak for themselves. They're really excited about not having to muster the sheep multiple times and about actually increasing the technology in the industry. I'm Danielle Morton, CEO and founder of Zondi. I'd like to say thank you to Scalare partners for their investment, but also the knowledge that we're gaining access to through all the connections. We're working specifically with Jenny Lee as a virtual CFO, and the ability to actually understand our budgeting and our finances has been invaluable. She's even enabled us to stop missing out on $82,000 in R&D tax incentive due to a deadline that we would have missed without her. So thank you very much to Jenny Lee. Thank you, Nick Roberts. Thank you, everyone else in the Scalare team, and I hope you have a great night. Thank you.
It's a very exciting technology, and it's lovely to hear that we're having an impact, because Danielle's fairly new to the portfolio, which is great. Speaking of new to the portfolio, I would love to welcome Johnny from Jettle. Johnny's going to give you an overview of what Jettle do and maybe even talk about some of the future plans.
Thank you. Go clicker. Hi everyone, my name's Johnny from Jettle, and thank you Scalare for hosting tonight. I really appreciate it. I'm very excited to share with everyone here some of the exciting opportunities that Jettle is pursuing in the education space. And I do want to start by saying thank you to Scalare for bringing me into the community. It's been an honor to work with you so far. We came into the community at the beginning of this year. And thank you to Giles as well for the introduction, for bringing us into the team, and to Japan, who has come on. He's the CEO of Tiggerless Parking. He has been an amazing NED for us and has been an incredible advisor, very much involved and immersed in what Jettle's doing. So what is Jettle? I mean, just by show of hands to kind of contextualize what we're trying to do, who here knows someone who has been tutored? It can be a family, relative, maybe yourself back when you were at high school, but who knows someone here who has been tutored or is currently getting tutored? Great, so that's basically everyone in the room, okay? And what that tells you is that the school system in itself without tutoring cannot satisfy the overwhelming demand that's out there for additional support. Everyone wants to improve their writing. Everyone wants to do better at school. They want to optimize their marks. They want to achieve their potential. Students, parents, and schools all want this. Every stakeholder involved. But unfortunately, because of the limited amount of time at school, teachers can't cover all of the content that students are required to know in order to achieve their best results. And if we think about the teacher, the stress on the teacher, I'm sure everyone here has heard about the teacher shortage at present. They don't have enough hours in the day to teach all of the content that they need to, and they don't have enough hours after the school day to satisfy all the demand that comes through for additional feedback from students. Right? Think about the amount of drafts that students are submitting to teachers on a daily basis, particularly around exam times. So the teacher's not able to appease the demand. If we think about tutoring, and you're a student who wants additional help at high school, so this is for high schools, and you want additional help, tutors are incredibly expensive. They're largely unaffordable for most people, especially if you're talking about experienced tutors. Over $100 an hour, easily. Okay, so the other thing about the tutoring as well is that not only they're expensive, but even when you want to get feedback, you have to book in an appointment. So think about the friction that's there, even in terms of time. I get my 1 hour a week with the tutor to spend that much money, okay, but I want feedback right now. There's a huge amount of friction in the market, and that presents a massive opportunity for us. Textbooks, well, we know they're largely unengaging, okay, very boring, largely redundant, especially for English and the humanities, which Jettle focuses on. And they're not interactive. So we want an online learning platform that students can engage with, interact with, they can apply their learning skills on. If we think about technology in schools as well at the moment, the most popular kind of technology that's used in schools in this space are LMSs, learning management systems. But they're administrative, they're class management tools. That's how students can submit their final assignments. So Jettle is solving two big problems through two big solutions via our collaborative feedback platform. So what this feedback looks like, and we are, again, trying to make it frictionless. Essentially, students are going to be able to submit responses and get feedback that's tailored to the needs of their course and based on teacher preferences. So think about Google Doc reviews and Microsoft Word review on steroids. Thank you very much for your attention tonight. And I'll take some questions.
So we have another founder that can't be in the room tonight. There's a lot of sickness around at the moment. I don't think he's sick, by the way. He just couldn't be here, which is Chris from Roy AI. So we've got another video for you.
Hi, I'm Chris South, one of the co-founders and the CEO of Roy AI. Having initially come from the recruiting sector, I've run my own outsourced recruitment marketing business for nearly 10 years. That business is still growing and now has over 30 staff across 4 countries, obviously with a new CEO running things. While running this business, our customers regularly flagged an unfulfilled gap in the market. They had huge candidate databases, but no way to monetize this data. In short, they needed an automation platform that was built for and integrated specifically with talent-based databases. This would enable them to carry out two-way communication through email, SMS, and WhatsApp with the huge volumes of candidates on their databases, and therefore undertake a range of previously manual functions faster and at far less cost. This led to the establishment of Roy AI in 2019. We call it Roy. Our mission is simple. It's to digitally enable companies to win the war for talent. We do this by utilizing automation and multi-channel communications to enable recruitment agencies and corporate talent acquisition teams to generate greater value from their existing candidate databases. You can think of it a little bit like HubSpot, yet for recruitment databases. The global recruitment industry is a $7 billion market, from which we believe we have a serviceable, obtainable market of nearly $200 million. It's just over a year since we accepted payment from our first customers, and we've grown to more than 65 customers, generating over $600,000 in ARR, primarily from Australia and the UK. We've also just expanded our market, signing our first large corporate customer, and have ongoing negotiations with many more, including Shell and Millennium Hotels. Our sales are all partner referrals, which keeps our cost of sale low. As part of this, we've just signed a reseller agreement with JobAdder, one of the world's largest recruitment talent acquisition databases, who are owned by Seek. JobAdder are embedding Roy into their platform and will incentivize their global sales and growth and expansion teams to sell Roy to new and existing customers, to enable these customers to make better use of the JobAdder candidate data. Roy adds real value to JobAdder and their end customers in 2 ways. Firstly, it helps improve customer retention. Recruiters keep their candidates connected and active, resulting in greater ongoing demand for the core JobAdder product. Secondly, automation has become a critical component for winning new customers. It's getting really hard for database providers such as JobAdder to close deals without it. Conservatively, if we only add 10% of JobAdder's global customers to Roy, we would increase our ARR by more than $1 million. Also, we plan to begin additional integrations in the very near future. Unfortunately, timing meant that I couldn't be there in person this time around, but I am in Sydney next week. If what we're doing is of interest to you, I'm happy to organise meetings via Scalare. Thanks very much for your time.
So number one, we work with locals. That has always been our model. When I first got on this stage 3 years ago, it was very much locals creating experiences and tours for others to explore during COVID. That is still what we do. We have 2,000 tours available around the world, produced by 900 guides in almost every city. And what happens is they sell those tours on our platform, and we keep 50% of those sales. Governments. Investment New South Wales is one of our customers, and they use our platform post-COVID, bringing people back to the CBD, and they pay a monthly fee to host their tours on our platform. Universities, UTS uses free guides for high school students. You want to explore UTS with your parents? Use free guides. Instead of UTS paying for an individual to walk you through the university, use free guides to walk you through. Those are still our major priority for us. They pay us revenue and it's very important. But where is the next opportunity? Where can we expand to? And that's through hotels and hostels. A red ocean market, extremely competitive and very limited opportunity to create a relationship. And that's where free guides comes in. When you stay at a hotel, every single one of us have done this. They've spent months practicing or planning on their computer phone, what should I do, where should I go, type into Google, everyone gets the same result. But ultimately, what you do is you walk down and you ask the concierge, what should I do? And they'll hand you a paper map. And that map probably isn't even branded with that hotel. And then what happens is you walk out of the door. You walk out of the front door of that hotel and that's it. Your relationship, they've invested. The towels were plush. Everything was amazing, but the second you walked out, that relationship ended. And that's where free guides comes in. Instead, you walk up to the front desk, scan a QR code, and you go on the YHA tour of the rocks. You go on the Four Seasons tour of Barangaroo. And ultimately, it builds that relationship with those hotels and hostels. To upsell, additionally, they have partnerships already. Include that within our platform. So my question to you is, why not invest in an up-and-coming industry? An industry that's still not at full capacity. Qantas just announced a few days ago that they're still not at capacity, but they're going to get there. So join us on this journey. I'll be around later today. I'd love to discuss with you our capital raise that we're currently going through right now. I'd love for you to be part of our journey and be involved. So scan my QR code, very easy. Connect with me, and hopefully we'll speak after this event.
So let's keep going. This is very sweet. I get to introduce a friend who I worked with many, many moons ago at eBay, Asim Brown, who has just been appointed the CEO of one of our startups, Catalyzer. So Angela and Ivy have appointed him, and I get to hear him talk again after all these years.
My background is I've worked in Silicon Valley prior to working with Carolyn. We started on the same exact day at eBay. And after eBay, I ran my own SaaS company for about 10 years. And then had the fortunate opportunity to meet Angela, and unfortunately Ivy couldn't be here today. And I've known them for a few years, and they said, we want you to come and join us. And they are two amazing co-founders with an amazing business with great ARR, great international opportunity, and I couldn't, pass it up. And all the pieces are there. We got a great business, and we're putting them together, and I think we're going to have a fantastic year ahead of us. So I might let you sort of do the pitch today in the essence of time, and I'll stop talking.
Thank you very much, Asim. It's lovely to be back again in the Scalare community. So many familiar faces and new faces that I'm really keen to meet. So tonight is about passing the baton, but Ivy and I are not going anywhere. We're really excited about the next chapter for Catalyzer. So what is Catalyzer for those who don't know? Ivy and I founded the company with a vision of empowering everyone to be able to change the world from your workplace. What we do is we provide solutions and opportunities for companies to engage their staff in all sorts of social impact and their ESG journey. So Carolyn today kind of set the scene on how businesses now have to be measured on very important commercial metrics. One of the metrics, the irresistible metrics that all companies are judged on now beyond the commercials, is what they're doing to the community, to the environment, their social, their governance policies, and ESG. So a lot of companies have these commitments, but how does that translate to the very important stakeholder of their employees and their consumers? And Catalyzer is a platform that does that by empowering all the employees in companies, big or small, to take part and have an active role in the ESG journey And we also centralize all the activities and allow companies to measure that impact and report on it in an insurable and auditable way. So since we started the company, we're really proud to be now working with over 40 enterprise customers. We started in Australia, now we have customers in Hong Kong, in the Philippines. So we are working with the Hong Kong Stock Exchange, and most recently, we're really delighted to have Virgin Australia also come on board as a customer. And so through that, we've facilitated over $20 million of impact through direct support of over 10,000 charity partners and in volunteering and fundraising to support these community projects. And our next mission is to bring this across the Asia Pacific region under Asim's leadership.
Hi, thank you so much for letting me join you virtually today. I'm really sorry I couldn't be there in person. I'm off traveling. A little bit about Curious. If you haven't come across us already, we are a platform that answers two of the biggest challenges that the communication landscape faces today. How to engage an increasingly remote and diverse workforce, and then how to measure that engagement and prove out the ROI that you need to prove to maintain your training and comms programs. We do that by delivering our customers a perpetual 3D world that they can house all of their training, meetings, resources, collateral, and events in. And it essentially gives them, I guess, a digital town square or a one-stop comm shop, if you like. By having everything together, our customer owns the ecosystem. By inviting their audiences in to explore the 3D world and physically navigate the experiences, we really heighten engagement and retention and recall and business outcomes. And we also have a very unique data set that we're able then to provide back to our customers so that they can see behaviors of each cohort, understand what it is that is working for them, and understand what it is that they should possibly have a look at shifting a little bit. We have some amazing customers on board. We've been in business coming up to a year, but what we're seeing is two really clear use cases rising to the top. One is sales enablement, and an example there is Peugeot. We've signed a global deal with Peugeot to speak to their media from over 50 countries. They came on board at the beginning of this year, have been using the platform roughly once a month for very, very different purposes. But we're seeing a wonderful snowball effect as the media keep coming back to the platform and experiencing new content, new experiences, and new opportunities to interact directly with the CEO and the exec team over time. The second use case we're seeing really commonly at the moment is L&D. And a great example there is our awesome customer Johnson & Johnson. They are up to their 4th license with us. So they are running 4 consecutive licenses to enable them to train very, very different cohorts, from surgeons to C-suites in hospitals to their internal teams. We make it very simple for someone to buy a single license, be up and running really, really quickly, can be a matter of hours, prove out efficacy, and then expand from there. I hope you have a wonderful evening, and thank you so much for having us. Bye.
I just want to talk a little on the investment side, really rounding up a little bit of what we talked about so far this evening. Two sides to what we look at, and probably slightly different story to the two at the moment. One is obviously making new investments, and as we've heard tonight, I think it's a great time to be out there investing. Ton of, as Carolyn said, she's been on board. She's been amazed at the quality of the businesses we're seeing. We've been seeing that for a few months now, so we're seeing lots of great businesses, great opportunities with our investment hats on. Great valuations, right? So we're an early stage investor. So for us to write our first check at a $2 million valuation compared to a $10 million valuation is going to make a real difference for us down the track. So good valuations at sensible terms make it a really exciting time for us. The other piece, I think, as Jenny highlighted, is really around the support we offer. So I think founders are becoming smart about the types of companies they want to work with in an environment like that. And hopefully, as you'd have heard tonight, we're founders, we're humans, right? So we understand this is net burn rate's a stat, but we know behind that there's someone's probably lost their job. So we get very close to founders and do I think a really good job of supporting them. So I think that's again leading to a lot of companies coming to Scalare. So from an investment perspective, we see a ton of opportunity, and that kind of leads on to what James is going to come up and say in a minute. Is we want to get out there and do more investment at the moment, so we need some more support to be able to do that. In terms of our existing portfolio, you kind of see the other side of that coin. Those that are out there raising money are finding challenges. Those that are looking to extend their runway are having to cut costs. So, again, always a massive, as we've said a couple of times tonight, massive, hats off to our founders. There's some real challenges out there, but they're doing some amazing stuff. So I look at the reason we show this graph is, partly to give us confidence that we've got some really great diversification amongst our portfolio, but partly to show that we can see how, both through selecting great founders and through offering the right kind of support, we can see businesses progress through the gears. So if we look at without calling out companies by name, our biggest company would be close to 40 million of revenue this year. We've got 2 businesses there that are well north of 10 million of revenue this year. 3 businesses that will be north of 10 million next year. 4 or 5 that from 5 to 10 million, and then a number from 1 to 5 and a number from 0 to 1, right? And that's over a 3-year period. So it gives us huge confidence that we know that we can select businesses that are going to go through that incredibly rapid growth rate, and hopefully it will give those founders that are earlier on in the journey, still doing those first few customers, trying to get from 0 to 5, right? That's probably the hardest bit of all, that we've got the right model and we can help them on that journey. So really proud of that. But as I said before, the reality is that it's easy to show a slide like this and show that everyone's going through the gears from 1 to 5, but not one of those founders isn't encountering challenges every single day of the week. So whilst with our investor hat on, we are super excited about the business and the business opportunity, and super excited about the portfolio we've got. We're also mindful that we need to lean in and help, right, and help everyone progress. But so today, rather than calling out individual stats, obviously we talked a little about the revenue, and there's so much great stuff going on. Today I was just keen to thank all of our founders for all of your doing, and to give you all confidence that you're all going to be heading down this line to build some amazing businesses, and we look forward to being part of that journey with you all. Thank you.
Thanks, Nick. I think with 24 investments and growing, you'd be hard-pressed to find any founding partner who could actually talk to every valuation, even if it is aggregated, on a slide like that. That's how close we are to the organisations that we work with. But thank you, Nick. Thank you. And last, hates being the one before drinks, but it's James Walker, founding partner. So as mentioned a couple of times tonight, we are going through our own raise to continue growing the community, and James is going to talk you through that.
And apparently I'm going to do it very quickly. So 2.5 years has been fantastic. We're in 24 companies, 8 are overseas, 16 here. And as everyone knows, we are involved in those businesses. We think it's what makes us different. It means we can help companies solve a lot of the problems that we solved when we were starting our own businesses. So we're super chuffed with the companies you've seen tonight, the companies that are on our portfolio. We want to do 10 investments a year, and we've been pretty close to that. And we see lots of great opportunities, probably now more than we've ever seen. And as Nick said, better valuations, which is great for our investors, great for us. Lots of great companies. Yesterday I saw 4 new companies first meeting. So there's lots of great opportunities out there. Now for us, we're not a fund. As most of you know, we invest off our own balance sheet. We've all put our own money in, and there are investors in this room who've also supported us. We think it's time after 3.5 years to really step it up. So with the Australian Technology Comp, we want to go a little bit earlier. We want to invest a smaller amount in early stage companies that come through the technology. So we're going to go from 10 companies a year to hopefully 16. So we want to increase the number of companies we invest in. On the normal 10 investments we do, we think it's important we write a bigger check. Companies are finding it hard to raise money. So if we can actually lead those rounds by writing bigger checks, actually helps our founders be more successful in raising money from in our community. So with that in mind, and as you've already worked out, we're here trying to raise money. We're about to kick off our own platform and look to raise money from the community, our current shareholders, and new people who are seeing maybe the story for the first time tonight. I'm happy to go into the details later. I'm not going to get into the details of what we're looking to raise, but it's enough to fund those investments for at least the next 2 years and write bigger checks than we normally do. So happy to talk to anyone about it. But more importantly, you should talk to the founders in this room and actually see if they are getting value out of Scalare and how we're helping them, and therefore how we think that could actually turn to better returns afterwards. So me, talk to anyone else from the Scalare team here. We're all well versed on what we're trying to achieve, and hopefully you get a good sense of that tonight. Hey, Neil. Yeah, so no exits yet. So it's all on paper. So we all know that doesn't mean anything yet, but no exits. But the return so far as IRR has been, up in the 60s, which is early stage, right? Now, we value companies when they do an external raise. So that's the only time we revalue. So we don't go and make our own assessments, but when companies go and raise money, that's when we revalue to the new raise. Now, out of 24 companies, only 8 have raised since. So there are 16 companies there that have not had an uplift or a downgrade, but we don't think that's going to happen yet for those companies. So it's a little bit mystery what the number actually is. Completely, 100%. Yeah, 100%. So yeah, so we're not a fund, we're a company, right? So Neil's going to invest. Yeah, that's a good point. So as a company, you will buy shares that we own. So with this raise will be ordinary shares, just like we already own. So therefore, you're already getting exposure to the 24 companies we're in, and obviously the next 16 companies we're going to invest in next year. So happy to talk to anyone after the event. Thanks.
No, I know that was the last one, and I've been promising you all night that's the end, and I'm standing between you and wine and food. But I just want to recognise Pernilla and Sarah and their team today. It takes a lot to pull this together, so I just want to say thank you so much. You made it look so seamless and easy, made us look like rock stars. You guys are amazing. Thank you. Thanks.